Hi guys, welcome to a new video. Today I'm going to be discussing just briefly the the near future for the stock markets, both in the US and elsewhere in Europe. The major indices, really how it looks. Obviously, it was a very bad week this week, -5% across most markets, which is a severe drop, the worst since March. And really, I think when you're in this position, what I know a lot of people are thinking is this going to be another drop? We're going to see another fall to the levels we saw before? Is this, the end of the rally that we've seen? And I'll be brutally honest with you, nobody knows. Nobody has any idea where the market's going. If they tell you otherwise, they're either delusional or lying to you. You can predict, you can suggest, you can use quant strategies, you can use other different ways of predicting where the market's going, but you never know. You can never be 100% certain. If you can even be 50%. I personally doubt that myself, but some believe they're often right and can be often right, but there's luck elements to that. So I'd say this: anyone who's predicting where the market's going, ignore them, especially around the election. Last time around when Donald Trump won, there were a lot of people, a lot of very successful investors who came out and said if Trump won, it'd be terrible for the markets. They were wrong. There was an initial drop and then it went really well. Same thing on the gold side. A lot of people saying if Trump wins, gold will massively climb. It did for a few hours, I think maybe even less than that, and then it fell back down again. And I think, that's what you've got to take from this. People can be great investors, but still have no predictive ability, because you can't. It's just not possible. You cannot predict what the market is going to do, and you need to learn that and deal with it. So here you can see some positives, some negatives for the week. I'd really recommend this website, which is The Big Picture, which is a blog run by Barry Ritzolt, who's runs a financial advisory firm in the US. I'll leave the link in the description, but this is a really good summation every week of the positives, the negatives for markets. You can see here COVID spike in the US and worldwide, lockdowns across Europe, a lockdown in the UK as of Thursday now, or a form of a lockdown, not really a full lockdown. Big headwinds. Now, that's coupled with the US election, which is looking like it's probably going to be quite tight, possibly. But again, same thing with the markets. Not sure you can really trust election polls. So we'll see. If you come over here, this is another website, Coifin. Also great for things like this. If you look at the monthly performance here, we're below levels were at the beginning of October. You could see kind of peaked at the beginning. We've been falling ever since, around the end of about a week and a half in. And that's obviously not a positive for most investors. If you have a look here, you've got the Dow Jones lost 4.28% this week. S&P, NASDAQ come down. You can see the European ones all around the same. Some massive losses here, and that's obviously not what you want as an investor. The question is, what do you do now? Well, look, I'd say, given all the uncertainty here, given that we don't know what's going to happen with the US election, that we don't know what's going to happen with lockdowns both in the UK and in Europe, and also what's going to happen in the US. Cases of coronavirus are rising everywhere. Certainly in important places. People are resisting further lockdown measures, thinking they're unnecessary. Boris Johnson's got a lot of stick for it already, especially from the backbenchers of his own Conservative Party. This is not an easy situation for any political figure. In the US, I think things might fare a bit better after the election. You might see a stimulus bill before the new president takes the White House. Difficult to know. It depends, really. I think if you see more restrictions come back into place, they will be forced to do another stimulus deal before the new president comes in. But to be honest, I thought they would have already done one already. So, again, predictions, not a good idea. So it's a difficult thing to think about. You can see over here on the performance ratings, just in the quarter, you can see here in the Americas, the best performance, Brazil. Then you've got Nasdaq minus 2% for the quarter, S&P minus 2.8, Dow Jones minus 4.6. Europe again, French CAC, FTSE, all just not in good ways. Obviously, you can see here Asia Pacific markets have fared slightly better. The Hang Seng, Australian All Ords up. They're doing a lot better with cases, so that's perfectly logical. I think a lot of the sell-off this week has been to do with cases, with election uncertainty. And what you should be doing now is, if you're a long-term investor, which I think most of you are watching my videos, you should be taking stock of the situation. Where do I currently stand? Do I have any companies that could be really damaged by either a certain election output? Normally they're not, to be honest. It's probably not an issue, but there might be exceptional cases. Or companies that could be massively damaged by further restrictions, especially in the US, because I think they might be coming, depending on who obviously is the president, but it also depends on the governors. If they choose to put in new restrictions, then there's not a lot the president can do about it, as we saw last time. So I think you should be focusing on that. It doesn't really matter whether the market goes down or up from here. What matters is whether you're positioned appropriately. You know, are you too much in one stock? Are you too focused in one industry? Yes, there's lots of things you can say, positive and negative, about diversification, but to be honest, it would be foolish to have all your money in, say, 10 mining stocks, 10 financial stocks. If you're searching for value, as I am, maybe sometimes that situation occurs, but I would avoid it personally. You don't want to end up, just in case there's a huge problem in that one industry or something that affects that one industry. You don't want to end up with that much concentration. Now, being concentrated, I don't think is a problem. If you're looking at 10 to 20 stocks, brilliant, not an issue. Just make sure they're not all the same industry. They're not all exposed to the same risks. Or if they are, just be aware of that. Be comfortable with it. I think that's the thing with investing. The statistics often show that people pull out of the markets in falls, come in too late when in a rally, really sitting on their hands, sitting on cash, not knowing what to do. Don't do that. Don't pull money out of an index tracker right now. Don't touch it. If you're in individual stocks, does this change your investment thesis? There aren't that many situations where it won't, I think, unless you were doing like a short-term play, or you were betting on there only being one lockdown. If you're in a company where a second lockdown seriously puts them at risk, then that might be concerning. I mean, one example I can think of is, Greggs in the UK, a business that has not come back fully before the second lockdown and has not, done as well as investors were expecting. It could really be at risk now, depending on how long this goes on for. Obviously, in the UK, it's originally only 4 weeks till the 2nd of December, but Michael Gove in the cabinet this morning saying that, it could be longer than that. I think any logical, really unbiased observer can say, it's probably going to be longer than that, possibly up to Christmas. Maybe they'll release the restrictions over Christmas and then move back into restrictions in January. Who knows? Again, predictions, not a good idea. The point remains, there is so much uncertainty here. And, I've heard a lot of things recently about uncertainty not being that bad for markets. That's just a misnomer, I think people say. While I think in elements of that can be true, uncertainty here is not good for your portfolio, because if you are invested in stocks that need a fully open business to survive, this could be a problem. This is going to make certain things more appealing, yes, but also the prices of things that fall massively, there's going to be concerns. Whether the business is viable, whether they can produce enough revenue in a second lockdown. And I think what you're going to see here is, the big e-commerce platforms probably take off again. Any of those kind of stocks, maybe they be US, UK, Europe, maybe less in the US because there isn't more restrictions as far as I'm aware currently, but if that arrives, they could take off more, even more. Just things to watch, to be honest. I do not know if this bearish mood is going to continue for very long. I'd say the data, the evidence suggests that it probably will. It's my gut feeling, but to be honest, I thought that early in the year and I was completely wrong. That's why. Don't make investment decisions based on predictions. Don't take money out of the market unless your investment thesis has changed. In specific companies, I wouldn't touch ETFs. That's just a personal opinion. But if you're invested like that, you're going to be exposed to these kind of swings, and you're just going to have to live with it. That's how you get compounding. That's how you make your money. That's how you increase massively how much you invest. That compounding is what you need, and taking it out of the market at a point like this is not going to help. And honestly, it's just fear. You're just pulling out because of fear. So yeah, I mean, as I said, I have no idea where the market's going. No one does. Even if they tell you they do, ignore them. Think logically. Has the investment thesis changed? If not, leave it in. Personally, I'd say be on the lookout for bargains. We could keep going lower. Companies, maybe build a watch list. What do you like? What do you don't like? What are you going to completely avoid? What things look really interesting? And really, use this opportunity. If we keep going down, there's another buying opportunity. You don't know how long it's going to buy for, how long it's going to fall for, sorry. But buy when it's appealing. Again, don't predict how low it's going to go. You will never pick the bottom. And if you do, you'll do it once. You'll fail the next time because it will be pure luck. No one can consistently pick the bottom. No one can consistently sell at the top. That's just a fact of life. Even if you want to, even if you've got the best models, the best ideas, the best systems in the world, you can't do it. Certainly not as a retail investor. So look, that's just my 2 penny worth on the subject. Stay invested. Assess your positions, assess your theses, but keep in the market and look out for those buying opportunities. But thank you very much for listening, and good luck to you all.